Good morning, everyone. If one or two people can let me know if you can hear me properly, then we're going to kick off. Fantastic. All right. Great to see there's so many people joining us this morning. A very warm welcome to the biggest ever CHRO South Africa webinar. And it's also the first one ever. We're extremely excited to work with Raun Smyth from Emergence Human Capital for this historical moment. We've been great friends with Emergence Human Capital in the last couple of years, and I think some of you might know his father, Pat Smyth, a bit of an HR legend, I believe. Lots of you will know the CHRO South Africa community. We've been around, or I should say you've been around for about 3 years with the CHRO Awards, lots of events, and many of you have hopefully already gone to HR in Daba Africa in the last couple of years. It's all about knowledge, network, and career. And I really feel that's more so now than ever during COVID-19. So as the sticky says, please say your name and job title and company in the chat. It's really nice to know who's here and that we're definitely among friends and among our community. This is your webinar. So as Raun presents, please ask questions. We'll try to address them now. If we can't, our team will note them all down. We've got an incredible CHRO South Africa team. We'll note all the questions down and we'll shoot them off to Emergence Human Capital, and you'll receive the answers sometime latest next week. We'll facilitate that for you. As part of the registration process, we also asked you, what do you want to know about your remuneration in times of COVID-19? The response was really overwhelming. So some of the themes that came up were performance bonuses. Izandi van Jaarsveld, Sabelo Mieni, Sibongiseni Zungu, and others asked questions about that. And then working from home and remuneration came up a lot. And people that asked questions about that included Primrose, Nyangani, Lerato Baroko, and I hope you're all here this morning, Giovanna Maharaj as well. And then the role of the unions and also impact of remuneration beyond COVID-19. I think Johan Pretorius wanted to know about that, and also Kuki Naidu and Zakela Khanakha. So today's presenter is Raun Smyth, and he'll be addressing all of those topics and questions. So please use the chat to ask follow-up questions if anything is not clear, or if you've got some burning ones there. So we'll shoot them over to Raun. There's no need to take screenshots. It's also not illegal, so you can. But we'll give at the end of the presentation, we'll give a link to 2 reports that really underpin Emergence has been researching and what this presentation is based on. And you'll also get access to the replay of this webinar. So yeah, without further ado, Raun, I would say stick on your camera and let's hit it with the presentation. Okay. Raun, I think you're muted, hey? Just so you might have to do that from the top there. Let's try again. I still can't hear you, Raun, and I could hear you fine just now. So just at the top, where it says where your camera is, when you've got your presentation on, and then it says turn audio on. Let me see. Let's jump off the presentation quickly and see if we can get you on. Let's go like this. Okay, off. And then can you maybe switch your audio back on? That's very strange because it was working just now. What else? Other tricks can we do? Yeah, I can see on, off.
Looks like Raun's just having a bit of a technical difficulty there, so we're just assisting him with connecting his audio. Maybe we can discuss some of those other questions that came up in the meantime. Well, I think your audio is mute. There we go. Now we can hear.
There you go. So it's a pretty tight one so far. On my side I can see the answers, and I realized the fact that you couldn't hear me was was a man-made error, as they call it. But I think we're going up to about it. It'll be nice if we can welcome Raun when he comes back with 500 people in this room. I think we'll get there. So he's joining us now, and then the moment there he is. Okay, let's see how this goes.
Joel?
Raun.
Sorry, I don't know what happened there.
Well, it's all about the results, and here you are. So I'm going to hand over to you. We've put up the poll in the meantime, Raun. So do you expect the effect of COVID-19 on remuneration practices to be temporary or permanent? And the poll will be up for a while, but so far, 57, 58, 57, it changes all the time. 57% of the attendees have said temporary, and 42 have said permanent. So it's pretty even, and it's still balancing out. So we're super. I know you've got an opinion on this as well that we'll hear about towards the end of your presentation. So I think without further ado, over to you.
Great, Joel. Look, from my side, can you hear me now? Let me just confirm that.
Yep, very good, very loud and clear.
All right. Right, guys, from my side, thanks everyone for joining. It's obviously quite a topical survey that we ran during the course of late April, early May. We published the results, and we had such a great response to the survey that we thought it would be important for us to share the results as far and as wide as possible with as many people as we thought needed to hear this message. Obviously, it wasn't a survey that we charged for, but we got some really excellent responses. I'm going to be taking you through them all today, in terms of the survey results. We're sharing some of the insights. Obviously, we're sharing some of the key findings. I'm going to take you through everything. And of course, if there's any questions, please get in touch, send us a message. And between Joel, Emergence, and certainly CHRO, we'll definitely attend to all those queries as far as is possible. So very briefly about who I am. So today, more or less, probably slightly older than in that photo. I've been in Reward for nearly 20 years. I'm the CEO of Emergence Human Capital. And to put it in context, Emergence Human Capital fits in the SME side. So small business co-owner, you'll see why that's relevant at a later stage in terms of some of the findings. A little bit more about my personal side of my life. We've got, I have one wife, 2 kids, 3 dogs. I'm currently in my spare time also a grade R and grade 1 teacher, doing the whole homeschooling thing. Obviously, like everyone else, I think some days we have good days, and other days our kids either fight with us or fight with each other, decide that they don't want to do anything. So I'm not sure if that's my wife or, some days it feels like me needing to drink straight out the bottle. Just to kind of survive and cope with, the additional demands that have been placed on everyone, really, in terms of educating their children, dealing with, obviously having a day job, and having to be an active member of your families. Some of the objectives of the survey, there was a void of data that existed around reward practices and what needed to be done to create positive and lasting impact in a number of organizations. So how do we, as SA business, position ourselves for success? So in order to help really give South African businesses info that's really usable, we wanted to measure a couple of things. So the first thing that we're going to go through is salary increases. So what do business owners, Remcos, and shareholders have on their minds in terms of how much are we going to give in terms of increases, if anything? We've seen a sharp spike in the number of organizations that are giving 0% increases. I'm going to take you through some of those key findings, and there's really a lot of detail that we're going to give you in terms of those practices around salary increases. We're also going to go through a general shift in reward and pay practices. What are those? What are we doing as South Africa to mitigate the impact of the pandemic? Employee benefits. We give quite a bit of detail here around, from a corporate perspective and an SME perspective, are employee benefits increasing in some areas, are they decreasing in others? By how much? Are 13th checks still prevalent, given the fact that there's less cash available to businesses, bonuses, dividends, pay cuts, Zoom calls, team, whatever your method for connecting is, webinar jam, in some instances, working from home. Lots of changes coming to the workplace. And the last thing is business sustainability. So how are organizations positioning themselves to avoid retrenchment? And there's some difficult questions that top management need to answer in terms of what do we do, how do we position, and certainly there's things that are going to impact people's pockets, which is really the purpose of today's webinar, is to go through it. The data we're going to share today should really help you inform some of the decisions that should help position you from a reward perspective in the short to medium term. In terms of the survey, as I say, we ran it towards the end of April. We got nearly 300 complete response, and we had enough quality data, even in that short window, where we were able to split the report to cover both the SME and corporate markets separately. And I think the ability to respond from a remuneration perspective was quite different for both SMEs and corporates. So we were fortunate, and I think the benefit to you guys as our clients, prospective clients, and just members of the general public is that how do we then start saying what is applicable to me as a business and what's not, and then how do we position this for ourselves? So you'll see that we split this out first by province, and you'll see Gauteng lion's share of the participation both in the corporate and SME markets, followed by Western Cape, KZN, and Eastern Cape. So really the primary economic hubs of the country are well represented here. In terms of participation by industry sector, professional business services, which really includes kind of your banking, financial services, insurance, IT, real estate, accounting, those kind of businesses, taking it away right at the top from both corporate and SME perspective. Manufacturing and FMCG coming in second, education, welfare, religious, regulators, postal government coming in at third. So really great participation across multi-industries. The first section we're going to go through is really around salary increases. I alluded to that in kind of the opening slides. So I'm sure we've all been here before at some point where, and we're probably going to see this going forward where organizations, we already know that there's been a moratorium placed on recruitment of new staff. So what's happening to the workers that are left? You have to do more work, and in some cases with less pay. So a little bit of a tongue-in-cheek there, but I think that's probably quite accurate to some degree for a lot of us right now. Going forward, obviously with the results of the economy contracting year on year, there may not be money in the budget for a raise, no matter how hard you work. We're going to talk a little bit about pay for performance and the impact that might have on people. So let's move on. Okay, so this is an important slide so that we understand the context of how increases are normally handled in the South African market. So you've got inflation rates over the last sort of 10 years or so, and you can see that there's a trend line drawn through the data. So the trend from an inflation perspective is that inflation's decreasing on an annual basis, and spiking at 6.59 back in 2016, and it's been on a downward trajectory all the way to last year, which was at 4.13. And this year so far, I know we're only 3 months in at 4.34. It's important that we understand that context, and I'll show you exactly why. So, salary increases this year. We're starting to get into some of the results of the survey now. So this slide's all about the timing of increases. So when are they granted, and when, and will timing be adjusted? So the lion's share of organizations say that they're not going to be adjusting when increases are granted, with 61 or nearly 61 and 72% of corporates and SMEs saying that they're not adjusting timing. Considering but not yet confirmed at 34.8 and 24.5. So organizations are still kind of trying to adopt a bit of a wait and see approach. I think that's probably got something to do with budgets. We don't understand the impact financially that this is going to have on our businesses yet, and certainly in the medium term. So organizations are still saying perhaps we should just adopt that wait and see approach. From a historical increases, so it's important that you understand that this is for the last period. So Q2, 3 and 4 of 2019 and Q1 of 2020. What did the market give, both for corporates and for SMEs in terms of increases? So 5.78% as average in the corporate market and 6.5% as an average in terms of the SMEs. Another key stat that you probably want to have a look at here is last year we knew that GDP growth was low at 0.7%. So there was already quite a big pressure on increases, decreasing on a year-on-year basis. So we started seeing organizations start to give a 0% increase pre-pandemic. So 12% of the corporate market, or one in 10 organizations, were giving a 0% increase in last year. This year will be the next slide, so I'll take you through that. And in the SME market for last year, you'll see that 26% of organizations were giving a 0% increase. Again, that was pre-pandemic. So what we need to do is now say, how does this look for this year? And this is predicted increases. So we're saying for the next period. So it's for Q2, 3, and 4, and Q of this year and Q1 of 2021. What you're going to see here is that the average increases have dropped off. So the corporates are now on average saying that they're going to be giving 5.25% as an average increase. SMEs at 5.1. A key and telling stat here is that the percentage of organizations that are giving a 0% increase for this year has jumped to 4 in 10 for the corporate market and 6 in 10 for the SME environment. So in perspective, what that means, and this next slide shows the differences in increases they're going to be granted between 2019 and 2020. So corporates are going down by 0.5% on average, where the SME market is going down by 1.5% on average. The change year on year in organizations giving a 0% increase is on average around about 30%. What's interesting here is that the increases that are being granted in the market are going down by a significant amount, either 0.5% to 1.5%, but CPI has gone up. So what that means is the relative standard of living for individuals is going to be decreasing, even for those people that that are still getting increases. Bearing in mind that if I just slip back one slide, 40% of people in a corporate environment are not going to be getting an increase this year. 60% of people in an SME environment, again, are not going to be getting an increase in 2020. Okay. So what are the factors that inform increases? Interesting stuff here is that affordability used to be number 5, all the way down below CPI, has jumped all the way up to number 1. So organizations are really just saying, well, we can't afford to have a look at what perhaps other organizations are doing. We can't afford to say, company performance is down a little bit, individual performance. Primary importance here is really affordability, where 35% of corporates and 44% of SMEs are saying that this is the most important thing in determining what our salary increases are. Individual performance is obviously still important. So who are those value creators in a business? No one wants to kind of say to your absolute top performers, we know you've worked really, really hard. You've still been delivering a lot of value for us, but we're not going to be giving you an increase this year. So I think what we can expect to see in the market is that although increases will be down, those individuals that are really driving performance, that are delivering results for the business, particularly those that are able to kind of shape the future of the business in this market, are going to be the ones that kind of are still earmarked for perhaps differentiated treatment from a pay perspective. We noted that some organizations have already started going back to their unions, and they're saying, well, I know that we have an agreement, but if we continue and we give you those same increases that we promised, we're going to have to go into a cycle or a round of retrenchment. So whether those renegotiations at this stage are going to be successful, we're not sure. We're going to have to wait and see. It's still too early for us to know. But we know that organizations are feeling the pressure from a finance perspective, and they're going back to the unions and trying to get them to understand that what was promised may not be possible going forward. There's a new entry for government assistance. Obviously, in the past, there wasn't anything around governments trying to assist businesses, just trying to stay afloat. So we see that that's quite a big new entrant for the SME market at 7.4%, saying, if we can get help, then we'll do more in terms of increases. If we can't, perhaps that's something that's going to influence what we can do for our businesses. What you'll see at local market pay levels, so what we mean by that is really what So if I have a business, what are my competitors, or what is the market around me doing in terms of paying their staff? And that used to be quite a big thing. And we're still seeing that, in the work that we do. Obviously, Emergence Growth, we've done salary benchmarking. We advise hundreds of organizations around, what is the appropriate level of pay? And we do that for businesses across Africa. What we've seen is that the corporate environment is still very much interested in that. The focus right now is, instead of saying, are we paying enough to retain our staff? What they're saying is, are we paying too much currently? So the focus as to why organizations are benchmarking has shifted slightly from a retention perspective to an affordability perspective. Still important, particularly in the corporate environment, less so in the SME environment, where you see only 3.2% of SMEs are really comparing themselves to the external market. So our advice here would be really to say, review the process that you take and the factors that you use in determining increases, and what inputs are you using. So, if you're in the corporate space, have a look at things like company performance, individual performance, those value creators. Still keep with the benchmarking, look at CPI, or the inflation rate, and really examine that basket of goods quite carefully in terms of how you're doing things. We're going to have a look at some of the remuneration practices that emanated from the survey. And the first thing is really around 13th checks. And we asked the question, are 13th checks guaranteed? And organizations came back with not unsurprising results. So 13th checks over the years have become less and less common. And I'm certain that COVID will accelerate this, where instead of just guaranteeing 13th checks, organizations are going to have to start saying, well, 13th checks, we know that they're expected, but they may not be affordable going forward. So, 13th checks, you'll see by the numbers there, that they're on average twice as common in corporates as they are for the SME market. What we suggest here is say, what are we paying for, and what do we remunerate for? Do we pay for people to come to work, or are we paying for performance? And that's what we mean by review pay for performance principles. Okay. This was a startling result. So we asked top management, was your top management in your business going to be taking a pay cut? Now, if you take in the SME market and you have a look at that 57% and you add it to the 34%, what that comes up to is 92% of SMEs of SME executives are going to be potentially affected or will be affected by a pay cut. And where pay cuts are confirmed, that's going to typically be in a range of between 10 and 30%. So let me repeat that again. 92% of SMEs and 55% of corporate executives are either going to be affected or will be potentially affected by pay cuts of up between 10 and 30% of their cost to company. Unsurprisingly, I think a lot of executives stopped filling out the survey at this point. I think it became quite real to say that this is something that we may need to do as a business. And that I think it just became quite a difficult thing to accept. So our recommendations here is really just to say, develop those forecasting models, try understand where your business is going to be. This obviously falls a little bit in sort of the crossroads between HR and finance. So really, I think HR and finance are going to have to work hand in glove here to try and understand exactly what they're going to be doing in terms of those top management pay cuts. Those pay cuts obviously are not going to be permanent. We don't anticipate them being permanent, but we'd have to wait and see. Bonuses. This was also some interesting stuff from a cancellation of bonuses. What we see here is 70% of bonus payments are at risk of being cancelled, whether you're in SME or the corporate market. So you take the 40 and the 33 in SMEs are at risk of being cancelled. And in the corporate environment, 29, we'll call it 30% plus 35, are either considering or will be cancelled for the current period. Individual performance, again, likely to play a significant part of the decision. Those guys that are creating value, that are able to position and still create value for the business in the new kind of environment. Commission-based rules.
Ron, it seems we've lost your sound there. Just double check if anything changed on your side. Just check if your headset is still properly plugged in, because I did hear a slight sound. You see anything that might have changed? No, I can't hear you. So I think we might have to do the same thing again. Can everyone hear me? Let me just jump on camera. Can it? Okay, so I'm audible. Okay, cool. Ron, we're just gonna do the same thing again. I'm afraid as the previous time. Something happened with your settings on your side, and we'll be discussing some of the questions in the meantime and the poll, and then we'll get Ron back. Yeah, apologies about that. And I think this is being part of history. The very first CHRO South Africa webinar with the 520 people curious about COVID-19 remuneration practices. I think we all have to figure this one out together as a community, and because I think these webinars are places where we're going to be finding each other. For example, next week we'll have a fantastic discussion with young CHROs, and they'll tell us what is the way to the top in HR, and it's going to be a fantastic discussion as well. So I think Raun is busy getting back on. Raun?
Joel, can you hear me?
100%. It was a quick one.
Well, I'm not sure what happened there. Apologies. I'm not sure. I was kind of rolling on like a steam train, so I'm not sure where you lost me.
No, and I'm sure you said some great, amazing stuff as well. So please just repeat the last 40 seconds or so.
So were we on this slide where you lost me?
Yes, bonuses.
Okay. All right. So look, I mean, from the aspect of bonuses, obviously a lot of people rely on their bonuses for different things. So you may be, typically trying to service debt, credit card debt. You may be trying to do a renovation on your house, really just try to kind of get back in the red from a debt perspective. So there's multiple reasons why people rely on bonuses. And, in this period, we're starting to talk about bonus cancellations, where it's a total cancellation of bonuses, just from an organizational affordability perspective. And we're seeing here that up to 70% of bonus payments are at risk of being cancelled, whether you work in a corporate or in an SME. So 3 out of 10 in the corporate and 4 out of 10 in SMEs are having cancelled or bonus payments cancelled in the current period. And 35%, sort of on average, are considering but not yet confirmed. So that's a high stat in terms of bonus payments being cancelled. As mentioned in sort of a previous slide, individual performance is certainly likely to play a significant part of the decision, where you don't want to demotivate those guys that are still driving value for your business and are able to really create a new path for your business in terms of sort of where do we go and how do we position ourselves so that we continue to remain as a sustainable business going forward. One of the things that we've seen come through already is that commission-based roles are the most heavily impacted, and these guys normally have a lower CTC. So take a sales role, for example. You would normally pay a sales type role a slightly lower CTC and then kind of bump it up in terms of what they can earn in commission or incentive pay. And these guys, obviously, in the last 2 or 3 months, we know that sales have been more difficult. A lot of organizations are trying to stockpile the money that they have right now so that they can make sure that their salaries are paid in the months going forward. So these commission roles, the commissions are down. It's really just quite tough for those roles to still be earning in the same way that they were if they haven't already had a 0% increase. So, quite tough environment for people in that environment. If businesses aren't if businesses aren't cancelling their bonuses, they're then saying, well, perhaps we can, if people are earning the bonus, we can pay it at a later stage. So if we have a look here, we can see that a large percentage of SMEs are deferring where it's 52%, and 21% of corporates will be deferring those payments, and 35% are still considering but not yet confirmed. So if those bonuses aren't cancelled, the deferment is certainly likely. From our recommendations perspective, what we've seen is that there hasn't really been a change yet to the mechanics of the short-term incentive scheme for now, where it's making it easier for people to attain those targets. What organizations are doing is they are reviewing their bonus structures to align more so to market conditions and self-funding principles. So what we mean by that is any good design on a bonus system should mean that the organization and the individual is in a better space, based on obviously achievement of certain goals. And those goals are more aligned to the new market conditions. So that's where we're seeing the big changes coming at this stage. It's less so in how easy it is to achieve. Obviously this is still a performance-based discussion. People still need to achieve certain things in order to earn those bonuses. But it's really the mechanics are being redesigned to say, let's make sure it's self-funding. Let's align it to market conditions, because what was working previously, we may need to adjust slightly so that we, again, and I'm talking a lot about positioning of the business going forward for sustainability, but bonuses really, if you kind of dangle a carrot in front of someone, it's a crude way of saying, incentivize certain behaviors, and those behaviors should be aligned to where you want to be going as a business. Okay. The withholding of dividends, so obviously this would impact shareholders quite significantly. And it's, again, large numbers that we're seeing here. 80% of SMEs and 50% of corporates are going to be considering or will be withholding dividends going forward, or certainly for the next period. High levels of considering, what we mean and what we understand by that is that the financial impact of this era that we're in is not yet fully understood, and it's impossible for us to sort of hold a crystal ball at this stage and say, this is where we're going to end, and this is when a vaccine is going to come out, and this many people are going to get it. So we really don't know how the economic stimulus package from the government is going to take foot, how it's going to either impact the corporate or SME environments. Is it going to fit some industries better than others? So it's the world is in obviously a state of flux, and we're all trying to kind of understand it as much as possible. And to a degree, I think that the surveys really helped with that. One of the recommendations that we have here is that you conduct cash flow forecasts and pipeline probability forecasting. So this is where HR, finance, and now sales will need to come in and say, our pipeline is looking strong. We believe that the probability of landing X work or Y work is really high, and we can say with a fair amount of confidence that this is where we're going to be from a cash flow and pipeline perspective in the next month, 2 to 3, as far as you can forecast ahead with some level of confidence. Okay. Benefits. This obviously is quite I thought that some of the results here were fascinating. So I'm going to take you first through the corporate side. And we asked for whether organizations were going to be reducing certain reward elements or increasing certain reward elements. So on the left-hand side, what you'll see is those elements that are reducing. So performance bonuses, as was on a slide or two ago, we know that performance bonuses are reducing significantly. Salaries are being cut. Retirement funding, self-fund allowance, learning, and so on. These are elements that organizations are reducing over the next period, and have already started reducing or have reduced already. Where reward elements are increasing, we see that flexibility in working hours. I mean, I'm a case in point here. I need a little bit of time in the morning to be that grade R teacher, that grade 1 teacher. So I need that flexibility in working hours to cope and adapt to what's being required of me. So a dramatic increase in flexibility in working hours. Use of cutting edge technology when you can get it to work and it doesn't kind of cut out on you. It's lovely. But the use of that cutting edge technology is obviously important. Linked to the use of that technology becomes a data question. So how do we help our people who work in obviously different areas and at different levels or thresholds of affordability, do we help them in terms of subsidizing that data connectivity? How do we offer learning opportunities going forward? Do we sit there behind a screen for 7 hours a day? I mean, I would probably rather shoot myself than sit behind a screen and listen to someone try to train me for 7 hours in a day. Wellness and EAPs, for obvious reasons, those employee assistance programs are seeing an increase in terms of what corporates and how they're investing and why they're investing in those areas. From an SME perspective, what we see here is again similar. What are the reward elements reducing? What are the reward elements that are increasing? For the SMEs, 57% of organizations are reducing salaries there. Performance bonuses, 46%. Leave allocation is also being reduced. Flexibility in working hours, which was for us a slightly strange one that we saw. Flexibility in working hours both decreasing and increasing on both sides. It's increasing more than it's decreasing. When we thought about the flexibility in working hours decreasing, what we thought is that going forward, organizations were still expecting employees to be available because now they're working remotely. So the flexibility needs to be, and people need to be available when the clients are available. On the increasing side, flexibility in working hours increasing, and that's not uncommon, and we were expecting that. Use of cutting edge technology, data connectivity, learning. So what we're seeing here is a very similar kind of picture, both for the corporates and SMEs, in terms of what's reducing and what's increasing. And this really just goes to saying, what are we as the corporate and SME environments doing so that our staff can remain productive when they're working from home? So working from home. I thought this was quite funny when I saw it. Working from home, day 1, see he's looking lean and mean. Day 5, less so. And obviously with us, a lot of us working from home, day 50 has been some of us rolling out of bed. Some of the particular work from home benefits that we measured was both obviously in the corporate and SME. You'll see all the information on the screen is on at the same time, and really just there's good congruence again between what the corporates and SMEs are doing here, where the 3 areas that organizations are really investing in, particularly in response to COVID, is manager training on how to manage employees remotely, and then training for employees on how to work remotely. So in both the corporates and SMEs, that's obviously important, that working remotely has kind of been seen as a norm now, and we need to invest in getting people up to speed in how to work from home. Data connectivity expense responded slightly differently, where that expense is being sort of carried by the corporates in a fairly significant way, and for that matter in the SMEs as well. Right. In terms of additional benefits or interventions that are going to be provided, corporates are investing in EAPs and increased health screening for obvious reasons. The mental health. If someone contracts COVID, what are we going to do to help them either deal mentally or from a financial perspective? So financial advice is in there, interest-free loans is in there. You'll see health screening. Obviously, that's now a requirement for anyone entering the workplace. Unpaid sabbaticals, very big in the SMEs. What's important here, and we always advise organizations to say that we know that budgets are already stretched and you can't offer everything, but if you can offer something to help your employees through this period, I'm sure that they would really appreciate that in a fairly significant way. So what are we suggesting as kind of next steps? We're saying that in terms of increases, really just try assess the financial impact and set increases to be fit for purpose. Something that's going to work for you, not cripple your business and position you well going forward. Bonuses. Review the design of the bonus structures to align to market conditions in categories. Obviously you want those bonuses where possible. Everyone wants to get a bonus, but it needs to be able to drive the business, drive results, and kind of keep your employees hungry. I don't mean hungry as in literally hungry, but hungry to achieve results. Alignment to job categories. What we mean there is, your sales guys may have really been feeling the pinch at this point. So just try to structure those incentives in a way that still keeps them wanting to achieve, that drives the kind of behaviors that you want for your business. The workplace obviously is evolving, and a lot of the changes are unlikely to be permanent. I think, from a consulting perspective, we've been delivering projects for our clients across the country. Cape Town, Limpopo. What used to happen was a client would ask us for a meeting in Limpopo. We'd climb in our car, drive for sort of 4 hours north, have a 1 hour meeting, climb in our car, and drive for 4 hours south. And then, what's happening now is we jump on a Zoom call and we're delivering the same result to the same people in a far more efficient way. And I think some of those changes are likely to be permanent. I'm very much a touch and feel kind of guy, so I hope to a degree that it goes back to the way it was, but I don't think that's going to be the case. And some of the changes will be permanent, some are temporary. So think about what's going to be permanent for your business and really try to align those reward and benefits offerings to what your business is going to need, not now, or probably now, but then also for the short to medium term, and be aware that things may go back to a little bit more of how they used to be. This is quite a nice one in terms of something that's probably quite easy for you to do, is really just to say, our goals are probably going to need to change as a business. And if you don't change the performance contracts, people are still going to be trying to do what they used to do. So if you want to really drive performance in your business and try kind of take advantage and get slightly ahead maybe of where your competitors are, is aligning performance expectations and letting people know and employees know that what they need to do is slightly different. And make sure that that is then measured not only in terms of their day-to-day work, but also in the financial measurement of how those things happen. And obviously, if you can do this, it's going to stand you in good stead for your next increase or bonus discussions. And the last thing is really just to support your staff. I mean, it sounds like one of those philosophical things, but I think a lot of people are feeling quite grumpy and that it's been a tough period for them. So if you could support your staff, I think they'll stick with you for the long term because they know that you're really trying to do the best that you can for them. And the need to remain relevant. It's one of those things that I think is easy to say, but difficult to do in some instances. I mean, if you're a business that was manufacturing things, it's easy maybe to change to start manufacturing sanitizer. But if you're a consultancy, I mean, you just have to kind of change the way you do things and remain relevant. So that's our advice in terms of just try to say, what are you going to do and how are you going to do it? And guys, that kind of leads me a little bit to about who we are. And we've been helping organizations do a lot of these things. A lot of organizations have come to us for advice around these particular areas. We've done a lot of this work, and I think in times where times are tough, it's always just about alignment. And how do we then create a happy workplace? Whether people are working at home or whether people are partially in the office, vulnerable employees, we've done a lot of work to help organizations still attract good staff. I mean, in these times, it's still important. How do you reward? How do you engage people? How are you getting the maximum levels of performance from your people? And I think, I can talk from our perspective that we've had to adapt the way we're doing things. And it's not been simple. We've really scratched our heads. I must say, I've lay in bed at night like I'm sure a lot of you guys have. And we've really had to think very carefully about where we're spending, how we're spending, how we're attracting, how we're motivating, what are the measures, in terms of what we want our staff to do and how they do it. So yeah, look, I mean, that's a little bit about how we're doing things at the moment. And Joel, you probably want to jump back on now because that kind of brings me to the end of my slide deck at this stage.
Fantastic, Raun. Thank you very much for those insights. And I don't know if while talking you could keep an eye on the chat, but I think there was a lot of engagement and a lot of questions and a lot of comments and some interaction between the various community members as well. So I think as we said in the beginning, we will definitely make sure all the questions that get recorded and you or your team get an opportunity to answer those if you don't get around to them in this session. I think because we had some technical mishaps, we are looking at maybe carrying on for 10 minutes longer than we anticipated, but obviously if completely understandable for all the attendees. If you have to jump off at 12, there will be a recording. But if you do have the opportunity to stick around, please do and keep asking questions in the chat. All the questions that will be asked before we end, let's say before 10:12, will be addressed either during the webinar or afterwards. So thanks again, and let's take the slide down so they can see you even bigger and sort of make some theories about the pictures in the background there in your son's room. This is
this is my son's room. You can see that Flash, the Green Lantern, Superman, and Captain America were also tuned in.
When you were talking about your own company, Emergent Human Capital, Raun, I could just hear everyone thinking, "What about your bonuses this year? What are you expecting?"
We're really not sure, John. We are very much adopting a wait and see approach. We were in a fortunate position that I think we run a financially prudent business. So we were just before lockdown, myself, Pat, and our finance manager met, and it was a fairly brief conversation, but we met in of all places, the parking lot. I think that's where a lot of conversations happen. And we had a discussion around where are we as a business? What is our pipeline? Are we looking good? How many months of salaries, say, do we have in the bank? Are we being prudent if we give increases at this point? And literally going into lockdown, we knew exactly what was happening. We gave full value increases to everyone. So whether we can do the same in terms of bonuses remains to be seen. Difficult, as I say, to have a crystal ball. Certainly for the short term, it's not something that we will be doing. I think we're not saying no, but we're certainly not saying yes either at this stage.
Awesome, Raun, and that's a good sign. That's a good sign for your company, at least. Just to pick some questions from the chat. Hemina Patton was asking about the timing of the survey. The survey was done quite early in the lockdown, and she says if the exact same survey was done now, or maybe a couple of weeks from now, the results will be significantly different. So, what do you think? Were you guys too early? How do you deal with that? And how do you think the results will be different?
Yeah, that's a good question, and one that I've also given some thought to. So, this kind of survey, I mean, we always run increases surveys twice a year in any case. So, we're going to be rerunning the survey probably in a month or two's time, probably more towards September, October. And at that point, we're going to be asking the same set of questions, plus maybe one or two, depending on sort of how the market is at that point in time. But is there ever really a perfect time to run a survey? If I'd run it today, people would have said, "Oh, you're not too late," or we've already tried to run our increases. So you have to kind of draw a line in the sand in terms of when you're going out to try collect the data. Things may be slightly different now. The fact is, organizations are still financially under pressure. So I think the results of the survey are very much relevant, and I think that they can be relied on given the statistical numbers that participated.
Okay, great. And just so everyone knows, if you haven't heard, you'll receive an email in a couple of hours' time with links to downloads of the survey report for both the corporate sector and SME. So that's going to be pretty interesting. And all the information that was in the presentation will obviously be in there and more. Maybe just to pick some questions again. Lomkosi Makagula, towards the beginning, asked what options do organizations have to restructure remuneration in response to the new world of work? As some employees are working from home and others are still essential. How does that work? And then Carmen Arico sort of went on with that, and she said, in addition to Lomkosi's question, do you think there'll be a shift of employers moving more towards part-time work, being the new norm with pro rata salaries? How do you see that, Raun?
Well, let me just give a shout out to Lomkosi. She happens to be our managing director in Eswatini. So thanks for that, Lomkosi.
On the spot.
Yeah, exactly. So, restructuring of remuneration over this period. Certainly, I know that we've seen people that works in the events industry, Joel, yourself not included. And I'm not talking about practice in CHRO. I'm not sure what you guys have done, but I do know that other people in other parts of the events industry have been put on short time, where their pay has been reduced to say 20%, which is really 1 day a week, in line with the affordability of what the organization can afford. And organizations have been actually giving letters to their employees saying, this individual has been impacted. We've dropped their salary by 80%. They're only receiving 20%. Please consider some kind of financial relief for them. And those letters are being sent to their creditors. So whether they're renting, perhaps they've got a loan from Westbank for a car or whoever the finance provider is. But those are all important considerations, and it's done in line. If we go back to salary increases, and the primary reason for why organizations are or how organizations are thinking about increases right now is in line with affordability considerations. And
how do you, and the question is also, how do you link that to performance, right? Because increases are great, but you want to really also make sure people are motivated to perform at the moment.
100%. And any good look. I mean, it's going to sound like I'm quoting best practice. It's going to sound like consultant talk. But really, most performance management systems ultimately would give you a score on 1 to 5, whether it's a manual system or an electronic system. Ultimately, you kind of want to get that 4.2 or 4.5, and then you kind of say, what's our threshold? You set your increase pool, and then you just kind of build that model that's going to set the appropriate increases per person given your affordability considerations, and all the different elements of pay and the long-term sustainability of the business.
I saw a term in your presentation saying self-funding bonuses.
Yeah.
How does that work?
So self-funding, what we mean by that is that say the organization is going to make R1 million this year. We mean to say that any bonus should result in the organization and the individual being in a better place from a financial perspective. So you've got if you generate a profit in addition to your budgeted profit of 500,000 Rand, you would typically take a sharing ratio of that 500,000 beyond what your budgeted profit is, and you would go into a sharing relationship. So you would say, I'm going to share 50% of the sort of kind of super profit, so to speak, with the people that created that value. And then the organization benefits by 50%, and the individuals also share in that wealth creation by approximately 50%. So that's a fairly simple way of doing it. Obviously, the measures that are put in place to make sure that the business achieves and that it's driving the right kind of behaviors is important. So there's a multitude of factors, essentially, but those self-funding principles are really important for organizations to consider.
Okay, great. And just to reply to your response, we haven't decreased any salaries at CHRO South Africa, because we're community builders, and communities are more important than ever in times of crisis. So we've just decided to work 3 times as hard for the same money. So I think that's a good outcome for everyone as well. Just a quick one. Also, something that came up in the questions that was sent through beforehand. What kind of differences do you see per industry? We've seen the events industry you spoke about, but can you say a little bit more about the different trends you see?
So some of the industries we've seen nuance in the data, as you'd expect. So some industries have weathered this kind of time a little bit better than others. So if you look at sort of the high-tech industries, the communications industries, I think it's no secret that data usage has exploded from an individual perspective. So you're going to find telecoms is certainly up. So I'm not picking anyone in particular. The guys that sell data, perhaps the ISPs, looking at, say, Full Ideas, Home Connect, whoever you use as your ISP. Those guys are certainly weathering the storm better than, say, the events industry or tourism, for that matter. We know that tourism's certainly down. Those guys, there's already large-scale job losses on the cards. You look at financial services. They are, look, I mean, they're starting to feel it a bit now from a defaults on loans perspective, but financial services, where businesses were very good at generating cash. It's certainly something that those businesses are weathering the storm better than others.
Okay, we also got a question from Dolores Mashishi, a big friend of the CHRO community and the HR boss at Altron. She's asking about vulnerable employees and if you've picked up on any sort of trends when it comes to their salary cuts and their remuneration approach, the remuneration approach to vulnerable employees.
So vulnerable employees are really sort of, and I'm not an expert on what classifies a vulnerable employee. From my understanding, it's anyone over the age of 60, and then those that may have a comorbidity. Either one or more. Those, I know that from what we are experiencing, what we are seeing is that vulnerable employees over the age of 60 are by and large already, where affordable for the business, being offered early retirement, because it's for an indefinite amount of time going to be perhaps not safe for them to re-enter the workplace. From a comorbidity perspective, those employees are really just being asked to work from home where possible, even if they are, well, they're sort of required to work from home. Where employees are still working from home, I don't think we've seen really anything around pay cuts. I think that would probably be seen as discrimination, just based on the fact that, say, I've got diabetes. It would be unfair to cut my pay and not someone else if we're both delivering the same value.
Yeah, that's definitely something that came up in the questions beforehand as well a lot. Working from home, do you somehow put yourself at a disadvantage if your boss tells you to work from home or if you decide yourself to work from home? But what you're saying is it should be even Stevens for everyone at the moment.
Yeah, look, I mean, it's I think it's the nature of it's human nature to say, treat me equally. Don't treat someone else better than me. I want to be treated, and it goes back to the equal pay legislation. And again, I think equal pay is going to come back into the spotlight again in a few months. I think it's kind of lost its shine through this period just because organizations are in survival mode. But people want to be painted with the same brush. It's like having policies in place. You need to treat people equally. Whether it's from a gender, there's been a lot of talk around gender-based pay differentials. It doesn't make sense to pay men more than women, or from a race-based. It doesn't make sense. People are delivering value; they should be paid in a similar way or at similar levels.
Maybe just to pick up on one or two other themes. I think the biggest debate in the chat, as far as I've seen from the corner of my eyes, has been the unions, Raun. There's a recent comment from Lankosi, obviously, but also earlier a lot of people were commenting either unions don't understand the severity of the situation, or they just keep pushing for increases no matter what's actually happening on the ground. Where others were actually saying, no, we have been partnering with the unions and they understand exactly. etc. So what, are you picking up some trends there, and can you give some advice in terms of dealing with those tensions?
Well, look, I think to a degree it depends on your relationship with your union. I think where you have a strained relationship, it's going to be difficult, and there's certainly to build trust takes a significant investment in time to say that what we're doing is in the best interests of everyone, and it's perhaps a time for a degree of transparency where possible to help people understand that should we proceed on this path, it may not be sustainable and we will have to enter into a round of retrenchments. And again, it goes back to your relationship and whether there's a level of trust. Sometimes it helps to get a third party in to kind of manage that, well, not manage the process, but get involved in the process and perhaps do some of that forecasting, assist in engaging with the union to see if there's a way that common ground can be reached. I mentioned earlier that there's renegotiation. Well, organizations are trying to renegotiate long-term contracts. Technically, it may not be possible depending on the nature of those contracts, but it is something that organizations, I think, are going to have to do in this next period.
Okay. Maybe just the last one to pick on now, and there's loads of others that will shoot to you on email, and every one of you, Dore, Titus, and all of you will get your answer in your inbox. But there's been some chat about data, and I think it was in your presentation as well. That obviously one of the extra remuneration benefits is that you can work from home and that you can maybe get access to the internet at your place of work. But then also some people are saying, no, I have to pay for it myself. What do you feel is best practice, and what are you seeing in the data that you've surveyed?
Yeah, so I think a lot of businesses, well, there's really two schools of thought currently. Is that the one is you're no longer required to come into the workplace, so that saving that you were having either based on your transportation costs to come in, you're saving either on petrol, you're saving on time, you're saving on your fuel costs. Those costs should really go towards paying for the data that is required of you. Obviously, if you work very close to the office, your savings would be less so than those that work, say, in Pretoria and live in Joburg or vice versa. The other thing is that the other school of thought is that data costs should be borne by the organization, particularly where the data requirements are very heavy. So if I only need a gig of data, it's easy for an organization to say, well, here's 99 Rand, go buy a gig of data, and that should last you a month. But if you're a heavy data user, you climb on a lot of webinars, that's perhaps something that organizations may need to consider in terms of subsidization. So I think it's not a one size fits all. You have to look at the individual and the particular requirement, either of the role or the nature of your business.
Okay. Raun, that was I think that was an extremely helpful session for a lot of people. I think if you've seen the chat, there's a lot of thank yous, and I think you've made 500 new friends at least. I think Lumkosi already knew, but all the other ones are new friends. So I'm gonna thank you very much for jumping on this webinar and sharing your data with us. Let's see. Let's go to this one. At the bottom of the screen, there's a URL, and my colleagues will also pop it in the chat. chro.co.za/whitepapers. If you go there, you're able to immediately download both reports that Emergence Human Capital has published. One on for the corporate sector, and one for the SMMEs. You can also go to the Emergence Human Capital Partner Portal on the very same website and find more information about the company there, including contact details if you want to get hold of these lovely people. Yeah, and then also keep an eye out on the very same website for a write-up on this on the webinar, and also a write-up later on all the additional questions. I think the recording, along with the links again that I was just talking about, should be in your inbox in a couple of hours as well. So that's it in terms of wrapping up this webinar. Next, we're going to be hosting webinars for the HR community, for the CHRO community every week. So this is next week's one. Please head over to our events page at the bottom. You can see the URL, chro.co.za/events. If you are under 40 and you feel you've got it in you to become an awesome CHRO, this is the one to attend, because we've got 3 experts that have all achieved this, and they'll share how they've done it. And then I think there's one more. Yeah, the week after, we'll do a combo event with our CFO community, and together we'll look at the way to combat fraud in times of crisis. We've got some very cool speakers with Claudel van Eck, former CEO of the Institute of Internal Auditors, and a couple of fraud experts, Mario and Brett, as you can see. And I just want to point out next week, I should go to the previous slide. Trishana Maharish is the current Young CHRO of the Year. So if anyone who knows how to be an awesome CHRO before the age of 40, then it would be her. So yeah, with having said that, I'm going to once again thank you, Raun, for your time and your insights, and I'm looking forward to working lots with you again in the future.
From our side, thanks everyone for joining us. It's certainly a privilege to address everyone in what's certainly been a very successful webinar. So Joel, thanks for the opportunity, and thanks everyone for listening.
Fantastic. I hope to see you all next week.